What is up, guys? Welcome back to another Hyve technical breakdown. I hope you guys had a beautiful trading week. I know I did, but this video is not to rub it in your face. If you didn't, this video is to basically just take you through some of the things that I use when getting in and out of a trade, so that maybe you can also implement it and see if that could benefit your trading in any way, shape, or form. So basically, I had 3 trades. All 3 I posted beforehand on my Instagram page. Basically, I had 2 trades. No, I had 1 trade on Euro USD, 1 trade on GBP JPY, and then I had 1 more trade on GBP USD, which was a losing trade. However, I knew the probability of me winning was very low. So what I did was I lowered the amount of risk I would usually take, and I basically halved it and went into the trade, mostly because I knew it was a low probability trade. And I posted the trade update on Instagram saying that I am looking to stay out of this trade. Of course, I didn't post the entries. That was mostly because I knew the trade was less likely to play out, but it was still a decent probability. So I took a chance, and of course I lost that trade. However, on the upside, I had 2 wonderful trades. Both of them were 2-to-1 risk to reward on Euro USD and GBP JPY. And that's basically what I'm going to go over today. So without further ado, let's jump into the breakdown. So guys, first trade we're going to go over is Euro USD. Now, remember guys, this was the same trade from last week, right? Where we took 1 loss, but then we got a chance to actually make back the money we lost plus more and then some. So that was on this trade right here. So you can basically watch the previous video I uploaded, which explains that if you missed it. So coming on to this week now, I'm not going to go over too much reasons as to why I was looking for a bullish trade. But basically, I saw some trap sellers here, and basically price went up aggressively. You can see aggressive buyers, which is something that I look for, no different than any of my previous breakdowns. I saw some aggressive buyers. I saw trap sellers here, and I knew that price would basically give these guys an opportunity, right, to basically get out at break even if they're still holding on to the losing trades. And that's basically what we got here. But what I wanted to do with today's video, guys, is to basically show you the effectiveness of basically using volume spread analysis, right? Because I had my zones drawn out, and that was basically what I posted on Instagram, saying that I was expecting price to come down to these levels, these zones, and you can see price reacted from these levels beautifully. But I wasn't able to capitalize on this trade right here. The only one I was able to capitalize on was this one right here, because this was during London session. So what I want to take you to is the VSA chart, showing the reasons why I got in for the buy right here. So if we drop down to our VSA chart, and you can see this was the 28th. So coming into London Open, the yellow boxes are basically London Open, and that's what I like to trade. London session, US session. And as before we got into London session, we got a VSA signal in my zone, and that was basically a shakeout, right? And shakeout is one of my favorite VSA signals. So as soon as I saw that, I was like, okay, well, if we get the counter trend line break and I see some bullish aggressiveness coming in market open, I'm just going to take the trade. So lo and behold, as you can see, guys, we had a decent trend line break right here as market open, and you can see this massive bullish engulfing. I can see the bears wanted no part of this, and straight away we just pushed to the upside. So I was able to capitalize a risk to reward of 2-to-1 on this trade, and that was basically it. Very simple, very effective, and that was the trade on Euro USD. So guys, you see the reason why I said don't dwell on losing trades, right? Because if I was dwelling on this trade, I wouldn't have made the right decisions to be able to make profit on this trade and this trade. So now I'm back up about 3 times what I lost in this trade. So guys, I'm just going to take this opportunity once again to say, look, don't hold on to losing trades. If you've marked up your stop loss and price hits your stop loss, get out and just wait for the next opportunities, because as long as you've got an effective strategy and as long as you're using proper risk to reward strategy, risk to reward management, you're going to be fine. So that was the trade on Euro USD, right? The next trade was on GBP JPY. Now, guys, this trade for me was basically my favorite trade this week. And I'll tell you why, right? Because I see this all the time. If you remember from a couple of weeks ago, right? We were in this trade to the upside. And basically what I started seeing on social media, yeah, was a lot of people getting in longs. And it was almost like people forgot that the market has its ebbs and flows, right? It doesn't just go up forever. So what I saw coming into this market was I basically saw people getting trapped. So you can see this massive wave of buyers, right, to the upside. Already, I knew that, okay, people are getting trapped, and guess where price stopped at? Look at this 166 handle, right? So a lot of times, whenever I see people on social media, right, taking trades towards one direction, I start looking for signs to go towards the opposite direction. And this was something that happened in 2021 with Bitcoin, right? A lot of people were getting involved in with Bitcoin. And when we hit that 60K level, we saw a VSA signal. Now, this is something similar to what happened with Bitcoin. So I'm first going to go over the GBP JPY trade just so that you can see where I'm coming from. So you can see here, we had the 166 flat psychological whole number, right? What happened? A lot of buyers came into the market trying to push beyond this 166, and immediately we had professional selling, right? We had institutions and all the big smart money traders you can think of basically jumped in, and look at the amount of selling that came into this market, overtaking these amount of buyers. So if we pop down to the VSA, I'll show you what was happening right there. So boom, you can see, guys, the 166 flat number, look at what we had. Potential buying climax. So let's read through this. A high to ultra high volume up bar closing in the middle shows supply overcoming demand and indicates professional selling, right? So you can see supply overcoming demand, right? All this demand and a ton of supply came in, which meant a lot of selling from the professionals. And already I knew if price was to come back in there, all these late buyers, they are basically going to be praying that they get out, right? They get out at break even. They're going to be praying for the market to come back. And that is simply what I look at all the time. And you can see when I saw all of that happening, right, I knew, okay, there was time to buy. And you can see my zone, this massive box here. You can see that was where I was expecting price to retrace back into. And what did we get? So right before market open, look at what we had. We had a trap up move. One of my favorite VSA signals, right? So what this is the first bar is up and closing off the highs. The next bar is a widespread down bar closing near the lows with its high higher than the first bar. This is designed to lock traders who are long into poor positions. So basically what this is, right, is that a lot of the guys who were basically trying to get back long again, this was basically a trap. This was basically trapping them, inducing them into long positions, right? But then these guys who were basically trapped would have been selling, and these aggressive sellers would have probably added to their positions, right? And immediately we got the move to the downside. And that's basically it, guys, right? This is something that I do on a daily basis, use a lot of Confluence. One thing, though, that you need to take into consideration whenever you're trading is these whole psychological whole numbers, because price, this is where a lot of traders get trapped in. So like as promised, let me show you what happened with Bitcoin, right? So if we go all the way to our Bitcoin chart, so this was basically the 65,000 psychological whole number. So you can see price came up, aggressive buying, right? We couldn't push above that. Price came down, and then we attempted, well, not we, but buyers attempted one more time to take price above. This is where everybody and their grandma on social media was basically buying Bitcoin, right? And on my Twitter page, I basically called it. I was like, look, price has basically put in a no demand, right? And I'm expecting Bitcoin to tank. So at this point, I started offloading some of my crypto bags, right? I started getting out of crypto because I saw the no demand at the 65 psychological whole number handle. And I was like, okay, yeah, this market is about to go bearish. And lo and behold, you can see a year and a bit later, we are basically in a bearish market. But let's read what a no demand bar is. So this no demand bar is an up bar on a narrow spread, closing in the middle with low volume lower than the last two bars. It can be a down bar if the high is higher than the previous bar. This shows the professional money is not interested in higher prices at this time. So you can see, guys, like I said in one of my previous videos, I'm not a professional. So what I do is I do my best to study the professionals, which is what a lot of people try and do, you know, trading smart money concepts and other concepts out there. But as I said before in one of my previous videos, if you're not studying volume, then all you're doing at best is guessing, right? I mean, I am speculating as well, but you have to take into consideration that those who move the market trade big volume. And what volume spread analysis does is it gives you clues to when these guys are participating in the market and what direction they're most likely going to. So that's it on this video, guys. I hope you've enjoyed it. I hope you've got some valuable information. And if there's anything else you'd like to see, please drop a comment in the comment section below. Hit that subscribe button, notification bell, and I'll see you guys on the next one. Peace.